All right, so a lot has been discussed already post all the budget announcements, but let's get you a clear-cut strategy, an action plan that you might want for your mutual fund portfolio and investments. I'm joined by Devender Singhal, EVP and Fund Manager, Kotak Mahindra AMC. Devender, good evening and welcome to the show. So we are aware about the changes in the capital gains tax. Now, talking about one particular category in focus as far as investment in mutual fund and according to market caps is concerned, we've seen multi-asset allocation has been a quite an interesting category, an emerging category where not only the AMCs are coming up with, but also there has been significant investor interest. I just want to understand from you the kind of changes in terms of taxation that we've seen in the budget. Its translation on a market on a multi-asset allocation fund and the kind of diversification that we have in this one. Where will it sit in terms of taxation? First question to you.
Hi, good evening, Kavita, and thanks for having me on your show. Kavita, when we are talking about multi-asset allocation funds, the multi means that you need to have at least three asset classes packed into one fund, right? Now, in India, SEBI allows us to have two different kinds of multi-asset allocation funds. One fund whereby you have a minimum of 65% in equity and equity-related investments that gets taxed as a normal equity fund, which means that if you are holding the fund for less than 12 months, you would be taxed short-term gains, which is currently now after the budget has become 20%. And if you're holding the fund for more than 12 months, it would now be taxed at 12.5% versus what was 10% earlier. There was another category within this fund whereby you could have 35 to 64% of your fund in equity and equity-related assets, and that was characterized as kind of a debt fund with indexation benefits. So if you hold the fund for more than 3 years, you would basically get long-term taxation as compared to debt funds, but you would also get the indexation benefit, which was very, very lucrative for somebody who's basically looking at a slightly conservative strategy, but a tax-efficient strategy. Now, post this budget, indexation benefits have been taken away, but the 3-year long term is now gone down to 2 years. So what you would have paid after 3 years in terms of long-term tax with respect to the debt taxation, along with indexation benefits, now if you hold the fund for more than 2 years, you would be taxed at 12.5%. Now, we think that this scheme or this kind of funds would become a bit unlucrative in the current scenario, and more money would shift to more equity taxation funds therein because they would be taxed at 12.5% post 12 months.
All right, Devendra, talking about Kotak Multi-Asset Allocation Fund, you mentioned three categories, right? So you fall under which category?
So we have a fund, multi-asset allocation fund, which is equity taxation,
Okay.
whereby we have a minimum of 65% each, in 65% at all points in time in equity or equity arbitrage.
All right. Do you also have a fund of fund in the same category?
Yes, Kavita. In fact, our fund of fund is almost 19 years old, and
Right.
it's been there. So we have a multi-asset allocation under the fund of fund strategy also.
Okay, all right. So now, looking at the taxation and the difference in this, what should be an investor strategy? Because I would also like to know about your diversification or your exposure across asset classes in your Kotak Multi-Asset Allocation Fund. But before that, looking at the taxation difference, do you think it's the time for multi-asset allocation in your portfolio, or you think otherwise also, it is something that gives you diversification and looking at all the asset classes performing really well, it's time for you to, maybe diversify through one fund across asset classes? How would you look at it?
So, Kavita, a very nice question to ask. We have always been advocating that, what investors should focus on is risk-adjusted returns, and multi-asset allocation funds gives you just that. Uh, the risk-adjusted return part is the most underappreciated part in the market because risk is always unseen. Investors typically look at the returns which a fund has given and then chase the returns therein, forgetting about the risk part. But when we have multi-asset allocations fund, which means you have more than three or more assets in the fund. Now, the number of assets as they increase, they should basically reduce the correlation between these assets and reduce the risk therein of the portfolio. Now, once you have more, assets coming in with little correlation between them, definitely multi-asset allocation funds give you a better risk-adjusted performance therein. So every investor should basically look at these assets, these category of funds for long-term savings. Secondly, everybody has exposure to debt, gold, and equities in Indian households. Typically, any equity investor would also have some bit of gold and some bit of debt also in the portfolio. If you manage these assets separately, they are taxed differently today. Physical gold is taxed separately, debt is taxed differently, equity is taxed differently, albeit with the least amount of taxation. So if you can pack all these things into one with least amount of tax, I think it does make a lot of sense.
But then given the time frame, is it good for investors to look at mutual funds or multi-asset allocation category with more of debt exposure or equity exposure? I know, this is a standalone question I'm asking you. I know you have a fund where you have maximum equity exposure. And it also depends as per investor appetite and understanding of diversification across asset classes that they need to take a call on this. But looking at the times that we are in, where we are also looking at a rate cut scenario, Devendra. So is it also advisable and makes sense to have slightly more exposure in debt via this category fund, or one can always have that kind of an exposure via different other debt mutual funds?
So, Kavita, we have been of the opinion so far that, if you're looking at a debt portion, you are either, or you're looking at a lower equity portion, then we have categories like, equity saving, which have a lower amount of equity, or a conservative hybrids, which are capped at 25% in equity, but would also give you, the tenure or the duration if you want to play through the debt part. So we have been advising investors who are looking for a more conservative approach to opt of these scenarios. And if they really want to, just play the yields, there are many of the funds in the bouquet are available for you to play whatever strategy you want to play through the debt funds. So in this portfolio, we suggest investors, that if you are looking for long-term capital appreciation and looking at, lower taxation product, this is an excellent product to look at. And within this portfolio, we can go as low as 20% in equity and as high as 80% in equity. So it is not that we always be at a higher point of equity. Directional equity exposure can be brought down to as low as 20%, depending on the market view and the various parameters which we look at in this one.
One last question to you, Devendra. Now, looking at the performance of various asset classes, you are diversified across equity, debt, and gold. Is that right? Or there's one more other category in your multi-asset allocation fund?
So, Kavita, we can actually, we also have silver in our fund at this point in time, but we are also enabled to participate in REITs and InvITs and in overseas securities also, which currently we are not having, but we are open to do that.
And how would the change in taxation for REITs benefit you in this fund? Is that linked anyway?
Well, in this fund, we would not be having any additional benefits because we were anyways taxed as per the equity taxation. So yeah, no incremental benefits for us at this point.
It's a time up for this discussion on the show today, Devendra. Thank you so much for being a part of this and explaining everything to our viewers today. Thank you.
Thank you. Thank you for having me on show.
Sure. Time for a quick break, and post that, let's get Shweta Rajani on board, who will be answering your mutual fund portfolio queries. In case you want to ask us any question, you can send across your queries on our WhatsApp number and email ID. See you after this break.
If you like this video, then like, share and subscribe to ET Now.